I really want to meet with you, Siam. I think
Can I just say that given that this is International Women's Week, I really feel uncomfortable with the analogy of lifting anybody's skirt. I'm not joking. I'm calling BS on that. That's not cool. We've got women on the panel, and I think it's inappropriate. So sorry, guys. I'm going to call that.
Okay.
I think that's not nice.
I think there's. So I'm very happy for open and honest Discord, and I will always speak my mind. But I think these days we live in a world where it's an offence to offend someone, and we can go the other way and be too PC. So I'm going to have to just stand my ground and say, look, I think you're being too PC and being too easily offended, mate. It's just a tongue-in-cheek.
I'm going to moderate on that and bring. So if you've got a question lined up,
question for you guys.
Good. Excellent, good. All right. Well, we'll come back to you shortly, but we will kick off with a couple of interesting topics, I think. So, morning, Siam.
Morning, mate. Morning. How's it going?
I'm good. Looks like you've had a busy week on all kinds of very cleverly weaved in social media platforms. I've been watching what you've been doing with a combination of Clubhouse, Facebook, and YouTube.
Yeah, I just hate.
Have you managed to wangle any others in there? That's quite remarkable, really.
Oh no, I just hate unleveraged work, and so by doing Clubhouse, it's completely unleveraged and a bit of a time whore or for your time, and so I just have a general rule of not doing unleveraged work. So that's why I'm running Facebook Lives at the same time, and doing a Facebook Live every day at 12 o'clock. So I'll have to silently run away at 11:50.
Yeah, that's fine. That's okay. The thing I was curious about, you mentioned about getting some sort of dish or other, because you're obviously stressing your bandwidth to death with all your different platforms. So that's been quite amusing. Tell us a bit about the dish. It sounds quite interesting.
Oh yeah, I just unfortunately I live in a bit of a rut or like a dip. And so I've got no 4G or 3G signal here, and the internet is shoddy. And it basically, whenever it rains or it's windy, the Vodafone and the EE, like mobile internet, just dies. And so I've got the Elon Musk Starlink internet. So
okay. You mentioned the name, but I didn't know what it was. So that sounded quite interesting. So Starlink.
So SpaceX have created a span-off company called Starlink. And they're going to beam high-speed broadband to every square meter on the planet. And I've just, I got in the pre-order, and they're sending it's about a satellite dish the size of a small, a large pizza on a stick.
Okay.
And and then it's worth looking into Starlink because that's going to be Elon's next IPO. So. His sole goal is to get $50 billion a year in revenue so he can put 1 million people on Mars, and Starlink is the vessel that's going to do it. So.
Is the Siam is it kind of equivalent to fibre optic kind of speeds, or not quite as yet?
So it's still in beta. So to begin with, it will be between 50 to 150 meg download speed for £80 a month. But then over the next 2 years, it's going up to 1,000 meg download and cheaper. So price is going to drop, speeds are going to go up. So
very interesting.
Yeah, he keeps saying that telecom companies, we're not a threat. We're not we're no competition for you. But
really?
Yeah, I think.
Yeah, just like he said to General Motors, little old Tesla, we're no threat to you.
Exactly.
Yeah. What's incredible is Tesla's now worth more than all the other manufacturers put together, which is astounding.
Yeah.
And he's done it in such a short time.
Yeah, it's because he's not a car company. Tesla's an energy company.
Yeah, amazing. Anyway, one obviously can't wait for his next intervention, like the interloops or underground looping system that he's thinking about, which is pretty awesome.
Yeah.
Yeah, I was just going to comment. I read an article from the chief exec of VW Group, which is obviously a massively successful automotive manufacturer globally, with some brilliant brands, some of the best brands on the planet in terms of cars. But he was saying basically we are absolutely screwed by Tesla because their market cap, all the money that might otherwise be into the automotive sector, the traditional automotive sector, has now gone to Tesla, so they can't invest. so they can't keep up with Tesla. It's just epic.
Yeah.
When you understand shareholder value, that's really, really, mind-blowing, to be honest. To be able to not only come in and create a product and disrupt a market, but actually fundamentally affect the financial dynamics in that market, I think that's quite extraordinary.
Yeah.
And it's something that I'd overlooked until I read the article, and I thought, oh my God.
Yeah, and he's a man in the middle between the consumer and the hedge funds. Therefore, he disrupts both sides of the equation, not just the existing industry, but somebody I know is he's just launched T4L, Transport for Life. Everything wrapped up, electric vehicle. They're all Teslas just now, obviously, but everything wrapped up into one monthly payment, and it's for either 3 or 5 years. You just hand it back, all maintenance, all tires, everything into one thing. That's just the way it's all going,
That's just extraordinary. Yeah. But the challenge is then for us as entrepreneurs to think, well, how the hell can we do that?
Well, I've got
in our industries.
Oh yeah, true. Sorry, I thought you were going to talk about Elon, because I've got an M&A future opportunity that involves Tesla, which I think probably the viewers here will find it pretty handy. But I don't know if you want to go into that.
Do you want to fire off with that, Siam? Sounds very interesting.
Yeah, sure. So,
after you tell us, I've got a challenge for you, Siam, after. Remind me.
Okay. So basically, every man and his dog is obsessed with buying a house and renting it out, etc. Okay, and it's been like that, since the Thatcher and Reagan era. And what's happening with Tesla at the moment is that it's not a car company; it's an energy company, and with their car arm, so to speak, they're changing the whole industry from buying and selling cars to ride-hailing. So if you look at all the charts. Over the next 10 years, 99% of all driven miles will be done via ride-hailing, Uber type stuff. And Tesla's leading the pack with its Tesla or robots, or as in its Tesla taxis. And so when Level 5 autonomy comes in and is approved legislatively, and so we can actually do it, it's going to kill loads of car companies and haulage companies. So my future play for the residential side and commercial side is, in fact, let's take the resi side. So he's creating the Model 2. So it'll be a very cheap car. So it'll be like 20 grand or under, and it'll be fully autonomous. And so what I'll be doing is buying just a little to begin with, 50 Tesla Model 2s, and you can charge whatever pence per mile you want to charge. Now, as you know, if you want to disrupt an industry, you have to 10x it better, cheaper, more efficiently, etc. And I was taking Norwich, for example. The average taxi journey in Norwich is 3 to 5 miles, and it's about £12.50. And if you had a Tesla taxi, or a Tesla which is fully autonomous, you could pimp that out using the Tesla app, which is a bit like Airbnb and Uber, and you'll be able to charge a tenth of that, so £2.50. So I'm planning on taking out every taxi company in Norwich, just for shits and giggles. That's for the residential side. And then for the commercial side, you then look at the Tesla Semi, which is basically an articulated lorry. And when I was looking at haulage companies, just a rough rule of thumb, it costs roughly £100,000 per year per truck. So that includes the driver salaries, the oil, the fuel, all the gubbins that go around running one articulated lorry. Oh, it's between 70 to 100k. Mm-hmm. And so when Level 5 kicks in, what I'll be doing just to test the waters is going and buying up a haulage company in the UK, a very small one with 10 articulated lorries, and then instantly replacing it with 10 Tesla articulated lorries. And so the running costs of a Tesla would be about 15k per year. So, because you don't have the driver salaries and all the other stuff. So you'd be saving ballpark, I don't know, let's just call it 70 grand a year per truck. So if I replace the whole fleet of the company's fleet, I mean, that's 700 grand a year profit on the bottom line from day one, once you're up and running.
Isn't there a challenge there around range with commercial vehicles?
No, because they do 600 miles, and what you'll, as in the articulated lorry ones, and even ICE lorries. They don't do 600 miles in they have to stop regularly, and then a lot of the cost is in drivers having mandatory rest breaks. And whereas the Tesla ones don't have to do that. So what I would do is all of my clients, I would simply put Tesla chargers in the premises of all my clients. So the lorry would drive there, and whilst they're unpacking, they charge it up, etc. And it would be able to run 24/7, whereas human drivers can't do that. If you want to have a 24/7 operation with, say, one lorry, you need like 3 drivers to do that. So then, if you're running a 24/7 haulage company, then the costs per truck go up. So for me, this is a really simple arbitrage the moment regulation is allowed in the UK.
Interesting. Yeah, I think it's that shift in regulatory behaviour which often impacts as well, doesn't it? Things like driver hours and so on. But I do think it's fascinating how once the product improvement comes in, a friend of mine bought a electric Mercedes. Yeah. And within, 2 or 3 weeks went back to the dealers and gave them the keys and said, give me my money back because this thing's a nightmare.
Yeah. So because it wasn't a Tesla.
It's quite interesting. well, yeah, exactly. I mean, it's interesting, isn't it? It's people want to have choice, and I think buying cars is quite an emotional decision. You know, I drive a Merc because I like the look of it, and I did look at Tesla, but I just completely irrational. It's the logical thing to buy, but I just don't like them as much to look at or sit in as I do.
Yeah, the interior is lacking.
So you want choice, don't you? So I think
it's definitely the future, Guy. Obviously, as we all know, it's inevitable, as Mr. Anderson says. But there's no there's no feeling about it. You know, there's no like oral sensation. You know, when you've obviously got that speed, which is nuts. But if you've got an equivalent car with equivalent kind of speed, you've also got that kind of that sound, which is so important. Yeah. You know, if you're into that kind of thing, I suppose. But anyway, Siam, the challenge, should you choose to accept it, on the deal that you just mentioned, how about combining one of your LORA models at the back end of that as a virtual kind of roll-up campaign on the haulage side of things, all options if you bring the following to the table. So your LORA, you're in for nothing.
Yeah, that's what I was going to do, mate.
Yeah, you can explain to everybody again what LORA is, but on the other side, imagine doing the same on the other side. So how can you do no money down on supply chain? And one of my friends in Naples has launched this company T4L, and he's got direct access to potentially negotiating for you to bring in a number of Teslas to test the model with a further rollout, therefore them putting the product in, you running it and doing a GV. So a potential LORA on both sides of the table.
Oh, I'm not sure about the latter. I'd have to mull over that. I think I would need more details. But with the commercial side, the way I was going to LORA is do the normal LORA, but another company which I would set up would own the articulated lorries. So once I buy the haulage company, it would get free unlimited use of my Tesla lorries. For I don't know, like a nominal payment of £1 a month or something like that. And then once my other company with all the assets has generated double the profits of the company that I've just LORA'd, then I would incorporate both businesses, and then you instantly bump up the value because it now has the trucks in the balance sheet, whereas before it wouldn't have.
I completely agree with you. I was thinking on the other side for the actual cars, for the taxi part of it.
Yeah, it's a tricky one.
Potentially, but I love that word. It's now become a verb, a LORA'd. I'm going to LORA it.
Yeah, LORA, low risk acquisition.
Yeah, could you maybe explain that to everyone, because it's so cool.
Yeah. Are you sure? I think Guy's probably bored of it by now.
No. I mean, look, mate. At the end of the day, we will bring the audience up shortly, but we like to kick off this room with an interesting.
Okay.
And it's a fantastic topic for how to buy companies at the end of the day. So that's what we're all about, mate. So there are some new new people in the room. There's some familiar faces, which is lovely to see. So before you dive into that, what we will do, because the room's starting to fill up, which is brilliant. So just real simple rules for how we run this room. We allow the hands to go up. So if you've got a question, please put your hand up. We'll bring you to the stage and we will answer your question. That's the joy of this live Q&A. We never know what's going to come at us from the audience, so keeps us on our toes. And there's a brilliant panel here of really, really experienced and knowledgeable people, so there's lots to chew on here. What we also do is ask you to connect with the guys on the panel, because you will get amazing knowledge bombs dropping at you all day, well, as long as we're in the room, which is about 90 minutes. And so make sure you connect, because we might not get through all the topics today, or there might be things that you want to ask about specifically, or you hear something that one of us on the panel talks about, and you think, do you know what, I want to connect with them. And if you've got fascination around all things trading, for example, and Bitcoin, then Siam is, for me, a world-leading authority. If you want to know about commercial property, it's Dan. If you want to know about the LORA, it's Kim. If you want to know about how to generate amazing recurring connections that are suitable for you in your network, then connect with Andy. And if you want to talk to Mr. Avins, who is a world expert in scaling, growing, and exiting your business, he's your man. And particularly things like understanding people and their contribution to your team. Paul's got some fantastic tools around that. And lastly, Mr. Jepson, one of my clients and mentees, who's gone from 30 years in the legal profession to buying engineering businesses. So that's really what this is all about. So without further ado, Siam, come on, let's dive in, because that sounds brilliant to me.
Okay, cool. Well, thanks. Right, so let's say basically the reason I created the LORA is because I've done so many deals where I've put money in and lost money. Mainly because I started off trying to buy distressed businesses, and distressed businesses are distressed for a good reason. They're screwed for a whole number of reasons. And so I then combined my trading knowledge with M&A. I thought there must be a way I can get, a risk-free acquisition. And so I simply incorporated call options. Now, don't worry about the term call option. It sounds very scary. And when you're actually doing it, you never actually ever use the term a call option, because it will just confuse the vendor. So let's say you have company X that let's say I want to buy company X, and the way I do it is I either buy 100% of a company if I really want it to be my train set and for me to be active in it, or I buy 35% of a company, simply because I don't want to deal with the operational BS of running in another business. So, and that way the existing director has great skin in the game still and can continue doing their thing, because they are typically the driving force and the main value of a business normally. And so what I'll do is I'll approach company X and go, hey, I'd love your company. I'd like to have 35% of it because you're running it really well and I only target good companies, blah, blah, blah. So here's the proposition. I would like to come on board, and I'll implement and share all of my systems, all my business metrics, everything, my marketing methods, blah, blah, blah. And I've also got a really cool marketing company, and I will parachute that into your business, and you can have full unlimited use of my marketing team. So that's use of me with the bigger picture type stuff and planning. You got my videographer, my digi marketer, my systems architect, my in-house web developer, all of these people. Now, if you were to hire, or if you were to employ all of these people, you'd need a payroll of at least 20 grand a month. So what instead, you'll have access to all of these people, but for a small retainer of 3 grand plus VAT per month. So that's the first part of it. Or no, I guess there's no sequential order, but that's one part of it. And and so the upside for me, and part of the conversation, is that what I'm going to do is I'm going to double your monthly profit. And if I do that within a 2-year period, I would like to be able to buy 35% of your business for whatever strike price, for a pre-arranged price. So let's say on day one, so you get the business owner to come up with the valuations, etc. So I go, right, so what would you say 35% of your business is worth right now, and then let's say it's 50 grand. So in the deal, you say, okay, well, if I can double your business over 2 years, blah, 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 and do everything I just said, I would like to buy 35% of your business for 50 grand. So that's what's called the strike price. So if you're looking at it technically, you're basically buying a £1 call option of the business for 35% of the company with a 50k strike price. So just a quick recap, if you do everything you said you're going to do and you double the business profitability at any point within the next 2 years, I can then jump in and buy 35% of the business for 50 grand. But the beauty of it, the reason why I say it's a low risk acquisition, is because if all goes well and I spend 50 grand to get that business, well, that money hasn't come from my pocket, because over the last 2 years they would have been spending 3 grand plus VAT per month, which is what, 72k. So all I'm doing is simply giving back 50 grand of the 72 that they just gave me. So really, I've got 35% of the business for free, or I've been paid for it. And
so Siam,
oh yeah.
So just press pause. So for the benefit of the audience and me, and because I think about these things like I'm a 4-year-old.
Yeah.
So to clarify then, so basically your proposition is, for £1, I'll buy in the option to acquire 35% of the business at the price that we agree it's worth today.
Yes.
Is that right?
Correct.
Okay.
Yeah. So
then the clever bit is what you're going to do is drive the value of the business over the next 2 years and get paid to do that.
Yep.
So that if in 2 years' time everything has worked out, you've improved the business, so everyone's shared in the upside, them as well as you, but you've received income, and when you buy at today's price in 2 years' time, in truth, the value of those shares in 2 years' time will actually be worth more, because you've improved the profitability.
Yeah.
So you've locked in the price today, but when you execute, you're acquiring shares worth a lot more, kind of like a share option.
Yeah, it's like if you could buy
Perfect.
£1 coins for 50p, you'd do it.
Mm-hmm.
So so that's one part of it.
And also, just for the benefit of the audience and myself, if after a year or even 2 years you get to that point and you think, this isn't really working, it's not what I wanted, or even my strategy's changed and I've got a better deal, is it right that you can then just walk away and they get to keep the upside? They've still got the business and all the added profit, but you have that choice as to whether or not you want to execute. Is that right?
Yeah, that's why options are great, because you have the option to do whatever you want. You can walk away, and if you do walk away, it would have been a big waste of time, but you've been sort of compensated with the 3 grand a month with the retainer, or whatever you make the retainer. Obviously, every business and business size and what you're providing will be different. You don't have to have a marketing company. It could just be someone like Andy with an amazing set of skills, like LinkedIn, etc., who could just say, you have me as a retainer, I'll do all the, other...
Yeah, you took the words right out of my mouth. So everyone listening to this and in their own businesses could be thinking about, well, what skill set do I bring to the party? One of the key things that I teach my mentees and members in the Business Buyers Club is when you start to engage in the marketplace and you talk to vendors, you've got to think about from the vendor's perspective, they look at you and think, well, what are you bringing to the party? And it's not always necessarily like Phil started buying engineering companies, but he has no obvious background in engineering companies. What he does have is a wealth of knowledge in law and also business management and development. So he brings an added dimension to the party, even if he's not an engineer. He brings that to the story, really. So what you talked about was specifically marketing, but everybody has an intrinsic value or knowledge set that they should bring to the deal, essentially. So I love the fact that you bring marketing, but there's lots of other components in any business that often need help and support to make that business more effective. So I think that's the point, really. So sorry, Sam, I kind of jumped in, but it's useful stuff, really.
Yeah, no, I completely agree. And some of the questions I get is, well, I don't have a marketing company. What can I do? Well, everyone has a skill. Kim for legal, Philip for accounting. Paul, sorry, we're new friends, Paul, so I'm not too fully clued up with what you do, but I'm sure you have amazing...
I DM'd you, don't worry.
Okay, etc. So and this is, bit of a sidestep. One of my goals over the next 10 years, and I'm doing it right now, but very slowly, is to create a capability group. So in this group, I'll have everything. So a marketing company, a PR company, an accounting firm, a law firm, IP protection, what else is there? And construction to a degree, but also a tech/digi company. So basically the full works. So I'm going to be doing business till the day I die. So I may as well have a group which can frickin' do anything that I want. And so when I then do future acquisitions, not only will I be parachuting in a marketing company, I'll be parachuting in my whole group. And so the retainer will be much better, and and I'll then have a higher probability that I will be able to double the business overnight, or within 2 years, or whatever. So these are, I guess, so far with the LORA, we've talked about the first steps, the basic first steps. The downsides are I guess there really isn't many downsides. When you jump into a new business, you will find all the nooks and crannies and the skeletons in the closets and the scandals within the first 3 to 6 months. Like, you cannot hide stuff for much longer than 3 to 6 months. And during that time, you'll realise whether you and the new director are compatible or not. So if it turns out over the first 3 to 6 months, or even in the first day sometimes, and it has been in the first week, I've been like, nah, let's not do this. You just go, look, it's not you, it's me. I've made a bad decision. I'm maxed out bandwidth, capacity, everything. I'm just gonna have to back out. So let's, you simply rip up the contract, and no harm's done. No one's lost anything, and so that's why I think it's really important. Now, I have to say, in the past, I tried different versions of the LORA. I've tried lots of different versions of the LORA. Originally, I didn't even bother with the call option stuff. I was like, if I do this stuff and we hit a certain profitability, can I have X amount of business equity of your business for free, or and the thing is, in theory, that sort of work method looks good, sounds good. But in reality, it doesn't work. And I've been burnt twice, where I've jumped into 2 different businesses. I did everything I said I would do. I think I didn't use double the profits. I think I would 1.5x the profit within, I think it was like a year or something like that. And I did it. And guess what happened at the end of the of the term? I was like, oh, so I've done everything. Can I now have my 35% of the business, please? Guess what? Both different business owners went. They went, no. What?
Yeah.
and so, and also, and I found.
How did they get out of the agreement, Siam? Out of interest, what was their?
Well, the agreements weren't that airtight, but even if they were airtight, they could have squeamed around it. And at the end of the day, if they the moment you start, battling each other, it's the end of the relationship. You don't want to then get in the business, because even if you do force your way in, you've got equity, you're then, the hostile element of their business. And it's like, I don't want to, it's like marrying someone that refuses to marry you, but then, their parents say, nope, you will marry Siam. And then before you know it, you've got a bride that hates you. And you don't want that in business, because they'll find other ways to screw you over, or, get their equity back, or they'll just liquidate the whole company, and
I was going to ask you one critical factor, which is, when you enter into the agreement, do you also have a shareholders agreement?
Yes. So now I do. Back then I didn't.
Right. So you were missing a shareholders agreement in those examples.
The thing is that even now, by doing a call option, it's slightly more airtight, because it's a legal contract. You swap that the moment you swap that pound. It's there. But even
would you have a shareholders agreement as well as the call option? So you've got 2 documents to fall back on. This is what we agreed back then.
Yes and no. It's sort of like a constitution, like a little pledge to each other. But you're not a shareholder at that point. Because you haven't exercised anything. So it is like my pledge to you, your pledge to me, sort of heads of terms sort of thing.
That's a good point. That's a good point.
And
at the end
Sorry, I was just going to ask, on the paperwork side, are there controls in place on sort of reporting their profits? Because I suppose from a seller perspective, you could manipulate the figures so that the profits don't show what they truly are and things like that. So I'm assuming the paperwork wraps up that sort of thing as well.
Part of the deal is that I have full optics on the whole business. So, like with the business we do, we have like a quarterly big session where I'll sit down with the business owner. They'll, we'll get the laptop open. She'll log on to the bank account, and we'll, I can see everything. I don't have access to it, as in I don't have the login details, because I know business owners are very, very. I mean, I don't give my bank details to anyone. None of my financial controllers or anything. So I know business owners are very touchy about that. So that's fine. But and at the end of the day, LORAs only work if there's trust, and that trust remains over that that period. Because if it doesn't and things break down, then you could do everything you say you can do, and then again, as I said, you don't want to be marrying someone that doesn't want to marry you, if that makes sense.
Yeah, exactly. Siam, the issue here is that you are doubling the profitability in a way that they didn't think that you could or that anyone could.
Yeah.
And they feel shortchanged because you're coming in with what's called an unfair competitive advantage, and you completely knock them off, and they go, "Oh my God, that was really easy, that R&D claim."
Yep.
And you go, "Can I please have 35% of your business out for 50 grand?" And they go, "Well, that was a bit too easy, Siam. What else have you got up your sleeve?" And the second thing I wanted to say is, "Can I have your bank details, please?"
No. You can if you buy 100% of my business, Ran.
I'll take a call option and let Kim draft my documents, please.
So the answer to your first question is really interesting. So mind you, I haven't done any R&D type claims with these businesses, but so you sort of this is actually a fresh issue, by the way, right now, that I'm experiencing right now. So there's one of the businesses where I've gone in and I've taken control of all the marketing, and I was very, very busy for the first 3 months, very busy, sorting it all up, putting up the funnels, the CRMs, the training the sales team, and all that sort of stuff. But the thing is with marketing, once you've set up the hard work, you sort of just let it run. Obviously, you need to fund it with the ad spend, and then you just tweak the metrics, and you're constantly split testing and stuff. But eventually, there's not much to do. And so one of the things I did was I completely changed the top end of the funnel, and then the business 10x'd. So not only did the business double, we 10x'd it in the space of 2 years.
Yeah, but you need to be seen to be working hard.
Exactly.
Because they're not resisting you because you haven't hit your target.
Yeah.
They're resisting you because they've worked really hard for 15, 20 years to build this manufacturing business, whatever it is, to 200,000 pounds EBITDA. And then you come along and you go, "No, forget about this. Here's £1 million EBITDA. You just need to use a better marketing." And they go, "What? I could have bought it in India for £5.50, and this guy comes along and he wants a third of my business." And then they go to the grandfather who set this business up, and he tells them where to go, and they're like, "Oh my God, we're between the rock and a hard place."
Yeah.
Genius has just increased our profitability 10 times, but our granddad is telling us to tell him to go.
So all of this, you have to deal on day one. So one of the things I'm very when you're getting to the throes of let's do business with each other, I do lift up the skirt and share all of the potential downfalls. And one of the things I mentioned in another one, I do a shit list and a fix list. So very quickly, I go down and I share all of my deepest concerns. I think you're going to screw me over here, here, here. I think this is going to happen. I think this is going to happen. And then they do their shit list and go, "I think you're going to screw me over, blah, blah, blah." And then you have a whole page of fear. And then on the next page, you do the fix list. So you then put in a clause to mitigate all of the different fears. And one of the fears that I put in on my shit list is that exactly what you just said. I feel that you're going to think that I've fluked it or tricked it or just been lucky, blah, blah, blah. And, that you'll think in the future that I'm not actually doing much. Because the way I work, it's heavy up front and then not much to the, down the line. And, that I'm worried about resentment kicking in, blah, blah, blah. And so I always make sure of telling the story of the fisherman and, quick story, quick side tangent. Cruise ship goes bust, can't fix it. Loads of engineers come and companies try and fix it. They can't. Eventually, someone says, "Oh, get the old fisherman in. He knows about boats." he comes in, looks around the boat, and after about 10 minutes, pulls out a hammer, bangs it in a certain spot, engine roars into life, blah, blah, blah. And he then bills them for 10 grand. And they go, what? You're here for like 5 minutes or whatever, you know? And then the invoice is like, hammer, $1, 20 years experience, $9,999, etc. So I always explain that story, but a lot better than that, obviously, and talk about the resentment kicking in over time.
You do that before you leave the skirt or after?
I don't wear knickers.
I really want to meet with you, Siam. I think
can I just say that given that this is International Women's Week, I really feel uncomfortable with the analogy of lifting anybody's skirt. I'm not joking. I'm calling BS on that. That's not cool. We've got women on the panel, and I think it's inappropriate. So sorry, guys. I'm going to call that.
Okay.
I think that's not nice.
I think there's. So I'm very happy for open and honest discord, and I will always speak my mind. But I think these days we live in a world where it's an offence to offend someone, and we can go the other way and be too PC. So I'm going to have to just stand my ground and say, look, I think you're being too PC and being too easily offended, mate. It's just a tongue-in-cheek.
I'm going to moderate on that and bring some levity back into it by referencing and reminding everybody that Scotsmen wear skirts as well. So let's call the line at that point.
So
and I think it's a brilliant topic.
What is wrong with that? Yeah,
exactly, Dan. Exactly. Even with the cold and the wind. So yeah. Right. So I'm conscious that the clock's ticking on that, and I think we've pretty much done that to death, Siam, and that was brilliant. And I'm pretty confident there's a wonderful strategy that everyone listening to this can benefit from without a shadow of a doubt. So I'm grateful for you for that.
No worries.
I'm also conscious that some of you guys have got a limited amount of time this morning. And Andy Gwynn is a half Celt. But it brings me neatly on to Mr. Gwynn, in fact. So when we were chatting, Andy...
I've just muted myself in the clubhouse. That Paul... Sorry, Paul, you're a dick. I have no time for people who are overly offended and like too PC. Like, seriously.
I think we should actually begin at the beginning and go, how do we find these opportunities and how do we target the sort of businesses that might allow us to, to exploit that kind of idea and concept, really.
It's like the whole entitled snowflake culture. It's like, oh, you offended me. It's just
a long time.
Life is life.
Incredible stuff to hear because it's inspirational and
I have no time for political correctness.
And I want to share an example of what's just happened because it ties in a number of things that you've mentioned today. Some of you know my core business is helping people with LinkedIn. I deliver on their direct activities, so with prospects, prospective vendors, but also when they bought businesses, putting LinkedIn direct strategy into their business. And I've been working with a guy who buys businesses. And interestingly, Guy, it's nobody from your network. And one of the things you alluded and you touched on the fact that Paul Avins is great with people and teams, got some amazing tools. And I'm going to refer to some of the behavioural profiles. One is DISC that people will have heard, and the other might be Wealth Dynamics. This guy has a very, very dominant, aggressive attitude. And a couple of things happened. He got a business, he was busy buying another business. He said, I want you to deliver on my LinkedIn strategy into this other business. And what has changed massively since COVID is the world is being bombarded with connection invites and crappy messages. So the need to write content and engagement that is of value is higher than it's ever been. And so I work with people on their messaging sequences. And this guy said, I've got a sales guy who's telesales following this stuff up. He doesn't like the messages, thinks they're a bit lengthy. Here's some that we've rewritten. And I said, okay, but here's where I don't think they've got enough value. You're not going to get enough response. No, we want to go ahead with it. Sure enough, no response. And then the guy stopped paying me. And when I didn't communicate stuff, and when I rang him up, he said, oh yeah, we're skint. We've got to put it all on hold. So well, there's no notice, no communication. And there's a few things I'm going to throw in because I meant to ask you, Guy. One was, I'm busy buying another business. I'm hoping to get I think he said a bounce back loan, and then I can pay you. And I said, but I'm doing work for a separate business. And I actually, long story short, he's very dominant, aggressive. And I said, give me some notice. Will you communicate with me? Tell me you're expecting this money's next week. If you don't get it by Wednesday, will you communicate? And he's clearly cash crap. And I said, it looks like you're trading insolvency in this business I'm dealing with. Oh, I don't know, I'd have to speak to my accountant. So I went, wow. He said, but the law's changed now with COVID, so it doesn't matter, does it? And everyone's trading insolvently, aren't they? I said, well, that's a big generalisation, because I'm not, and I'm not, any of my other clients are. Yeah. And crap, you're buying businesses. So the thing that comes for this that I wanted to share is, one, you've got to have proper marketing in place in the business to be spinning up sales and marketing for that business. But ultimately, I'm sure a lot of you will focus on this, I know Paul does, it comes down to the owner. And life's a reflection on what happens. This guy, I could have predicted what was happening in his business. He even tried to allude that, well, my sales guy might be right and you might be wrong. And I said, well, at the end of a conversation, you abdicated responsibility for me to speak to this guy, not delegate. Your guy admitted he doesn't know anything about LinkedIn. It's an absolute mess, but your style is such that you've sort of run off. So one thing I would say is you've got to be looking at your own style and the styles of the teams. And my understanding of wealth dynamics that Paul Avey's an expert at is it tells me who I need to work with in order to create wealth. And this guy clearly is in a mess and playing out his pattern and avoiding stuff and running on fast and now trying to buy another business when the one he's got isn't working. And that all came out, it was so predictable just from the way he was handling me, working with me, on me delivering his LinkedIn activity. And it's absolute bonkers. I'm just about to have to write to him and say, I've handed it over to my debt collection department in the legal team because, so there you go. I wanted to share all that because what came out of it was it all just boils down to the person's style, behaviour, patterns. And that's ultimately, doesn't matter how good you think you are at sourcing businesses and buying businesses, unless you are good, it's easy to get excited. And what I've heard today is some great stuff about putting
just to follow up on that, Andy, I think one of the key things that I always talk about, and we talked about it last week. Are you still there?
I have. I just said, bloody iPhones are great, aren't they? My doctor in the UK has just called me. Maybe I'm old enough for COVID injections. I'm in southern Spain, and there's warm wind for the first time in 8 weeks.
Hurrah!
But it cuts in over Clubhouse, so my apologies. But there you go. I pretty much said what I wanted to share.
That's okay. So I'm just going to add to that and say one of the things that I always teach my members of the Business Buyers Club and anyone that asks the question really is always start with what's the end in mind? Why do you want to buy this business? How does that fit into your strategy and what you're trying to achieve? And I think if you get clarity around that, and I recommend very strongly a great book that I've been following, which is Enough by a guy called Paul Armson. He's an IFA who completely pivoted his business to understand that when he was talking to his clients, he was trying to get them to think about what is enough in their life. So if they own a business and they want to sell it, at what point is it the right time to sell so they can do the next thing? And that's a brilliant way to look at everything that we do and everything that anyone in business does, really, because it's starting with the end in mind, really. But with that note, I just want to bring Paul up, because Paul, I'd just like you to tell everybody about Contribution Compass. There'll be probably lots of people in the audience familiar with wealth dynamics and the principles behind wealth dynamics, but I think what you've developed with Contribution Compass is a whole lot more sophisticated, but goes a long way to what Andy's described there about know thyself. So if you're in business and you've got a team, it behoves you to really understand, first of all, what your strengths are, not your weaknesses, but what you're in flow doing, and then making sure you've got the right team around you, really, so that everyone's in flow and everyone's having a good time.
Yeah. Okay, cool. Well, firstly, thanks, Guy, for giving me the opportunity to be up on the stage again. I really appreciate it. And let me give a couple of sort of stories or edges that feed into the conversations that have been going on so far today. So, from my perspective, if you're going to buy a business, there's two things. You need to understand yourself and your own contribution to that business you're about to buy into. How are you going to add the value personally, and whether it's through a team that you're bringing in, but you need to understand your own profile. Secondly, if you're, I won't ever do a deal, we won't ever hire somebody, or we won't buy a business or help a client buy a business unless they profile the business owner they're negotiating with as part of the process. Because if you don't understand what drives them, how they process data, how they communicate, it's very difficult to understand how to put it in language and in a way that's going to work for them. And you risk creating friction where there could be a huge amount of flow and opportunity. And you're going to, depending on the type of energy that you're dealing with, you will need to package the proposition differently. And not everybody shares your own profile. So, for years I was involved with DISC. I then became had a company. My company became the biggest distributor in the Northern Hemisphere for wealth dynamics. However, there were challenges with it. We didn't have tools like the team report that we have now. We didn't have tools to help with recruitment and profiling candidates coming through. And for me, if you're going to buy a business, it's the market, it's the niche, it's the products, it's the revenue streams. Two, it's about the people. And I often say to business owners all the time, I say, listen, if you look at your P&L, what's the biggest single cost on your P&L in most cases? And for most people, most businesses, it's people, right? People are a massive monthly drain on the business if you think about it in terms of outflow of cash. Not drain mentally or emotionally, or that can be the case if you've got the wrong people on the team. But I say to people, so look, on average, if you think about your salary payroll, let's just say a business has got 100 grand a month payroll. Let's forget the fact that the UK has the lowest productivity performance stats in Europe. Let's park that for a minute. Let's just ask a business owner, well, how productive do you think your people are? How much value are they creating out of 100% being there? They're all doing the right things. They're all massively productive. I said, what do you think? Most entrepreneurs will go anywhere between 50 and 30%. Now think about that for a second. You've got an asset in your people that's costing you 100 grand a month, and you reckon you're only getting between 30 and 50% return on that investment. Now, when you think about it like that, you go, holy crap, if I can get my productivity in my people, if I can get my performance in my team up from 30 or 40 or even 50% to 60, 70, 80, which is easily doable within 90 days with the right tools and the right training, that money, that extra value that is created through that team drops straight to the bottom line. So that's the first way I would look at saying, look, this is how profiling can significantly help you streamline, simplify, but also leverage the talent that you buy when you buy a business, because immediately you can get uplift there. The other thing is to think about it this way. If you understand the profile of the kind of business, not just the business that you want to buy, but the owner you want to buy, you can totally change your marketing. So your marketing, if it's an activating energy, which is somebody who likes to move really fast, make quick decisions, you can craft marketing messages and sales funnels that talk to that kind of person. If you know the industry you're buying into, they're fairly slow. They take their time. They ponder. They're what we would call sustaining energy in the contribution compass world. Then you would craft a different sales journey. You would craft a different attraction journey and customer flow through a funnel with different language, different imagery, different communication. So profiling for me isn't about understanding just one person. It's about understanding how you communicate in a way that gets people to know you, like you, trust themselves, and trust each other. When you do that, you get things to flow, and it's all about creating flow. The reason why we used the compass is because depending on where you're trying to take the business, you need different people. You need to navigate in different directions depending on what you're trying to do with the business. So this whole idea of, look, the time you need the map is before you're lost, but the time true north is always true north, but depending on where you are on the map and depending on where you're trying to get to, you're going to need a compass to navigate, and you're going to need different people with different skill sets. So my belief is that for most businesses, the people in it are the most under-tapped asset. And if you're going to negotiate a business, why would you negotiate it without understanding the team that you're about to buy into or take over before you bought it? So like Siam is talking about having potential conflict with owners in the first 2 or 3 weeks. You can mitigate that if you profile them before you even do the deal, because you're going to know whether their profile is going to work with yours. You're going to know what their issues are going to be. You're going to know how they're going to react. That stuff becomes incredibly easy to predict because the tool's got 96 data points. It cost over $100,000 to develop, and it's got 96 data points. That's statistically way above average in terms of accuracy. So look, I'm not here to pitch the product. I'm here to pitch the value of understanding how you like to buy businesses, but also the target market and how they like to be engaged with and communicated with, in order to make them trust you, to feel that they can trust you to do the deal, which ultimately all deals fall apart for a lack of trust. So I hope that sort of serves you guys. I was going to say, if everybody, I've written an ebook which goes through the 9 steps to building a high-performing team, the things you need to put in place, and goes through this in a whole lot more detail. If you DM me the word Teams, so if you hit me on Instagram, DM me the word Teams, I will just post you a PDF download link. No opt-in, no need to go into a funnel. This isn't what this is about. This is about serving and adding value. And if you want that ebook, just hit me up and I'll drop a link over to you later today. So, but does that explain how I'm thinking about it? Because I don't just see it as simple as going, great, understand yourself. It's actually, it can change the way you do all of your marketing and give you, I mean, if you're talking about businesses that get 50% increase in productivity from the same team, which we've done time now and time again, that's pure bottom line profit. You don't have to spend any money to get that ROI other than a small amount on training profiles.
No, I think the point is beautifully well made, and that's why I knew you'd had some value to that particular point that Andy made. And does that chime with you, Andy? Because you raised that example, really, a real life example of someone that just doesn't get that, but would benefit massively if they did.
Absolutely. And you know, my background was coaching business owners. Now I'm niching into just delivering and helping them with LinkedIn. And I sat there and went, you are missing so much opportunity. And not only that, you're going bust and you're on with the next thing, purely because of your pattern and your style and your blocks. And my role wasn't to coach him around that, because that's not what I do anymore. And it's like, it's impacting just on his LinkedIn strategy. I mean, and then I could see it just, it's going to kill his business. It is killing his business. His business is trading insolvency and going bust. He can't pay me, and it's not a lot of money. In a business he bought, and now he's on buying the next one. So absolutely, it all comes down to the people. And if it shows up in one little part of your marketing activity, where else does it show up in the rest of your business? You know?
Yeah. Can I ask a cheeky question, Andy? Am I right?
No, you can ask anything you like, man. Go on.
Am I right in thinking that individual went through a training course with one of the other guys that teaches how to buy companies, possibly for £1?
Right. Yeah, that's probably no reflection, but yes. Although, actually, if you think about what Paul's just said, the guy you're talking about, the other bloke, I know his style and his style of marketing, and it probably attracts like. And actually, there are some similar profiles there. So that's interesting point.
That's what I was getting at. It's like, Gavin has got some experience of this, and the contrasting styles and approach, if you like. And I think the pipe dream of buying, a wonderful company for £1, and Siam talked about, he started thinking that was an easy way, and rapidly realised that it isn't an easy way. So, Gavin, can I just ask you to comment on that? Because I know you had a vendor meeting last Friday, which I would love. I get excited for other people when they're having vendor meetings. How did that go? And can you comment on that kind of fool's gold approach?
Yeah, to both things. It's all about rapport. The most important thing is building that rapport. So the first meeting, as many in this room will acknowledge, is about building that rapport, and it's about allaying fears. So we had previously had a first meeting with a major shareholder, but a very influential minority shareholder who's a key and main employee in this business needs to be brought on board. And it was presented to her by the main shareholder as pretty much a done deal, and it was like we were going from first meeting to marriage in her mind. Who were these guys? Where they're from? So we actually just took it all back, listened to her concerns, explained the vision of the future, and built the value. So taking on Siam's idea about presenting overwhelming and compelling proposition to them, we've done several things. We've brought to them the capability of the digital marketing that Siam was talking about earlier on. They have access. It's a media platform which is directly strategically aligned to the target market, so they have access and a trusted relationship with our target customers, but they're not commercial. They've got a background being in journalism, so we can very quickly commercialise that. And
Then, in addition to that, we're using a new software tool which is absolutely potent in really being able to demonstrate the value add for a number of the strategic interventions I've been doing to help scale and grow clients for over 25 years. But then what the software does is help, in their mind, take the intangible and make it incredibly tangible, and also, in their mind, reduce risk. So we're looking, to really pile in the value so it's a compelling proposition. And so, yes, as a result of really being empathetic, understanding where she was in terms of the dynamic of the relationship, we brought her on side. We're structuring a deal. We have one final kind of partner. There's an online component to it, which is a subsidiary. There's a separate partner in there, so we're going to go through the same process with a separate partner. And by this time next week, we will hopefully have a deal, which is incredibly exciting. So it's about the rapport piece. And one of the things early in my coaching journey, probably 2 decades ago now, there was a phrase that you always keep in mind. First of all, there's an assumption. In any one moment, a person's behaviour is the right response for them. Question, what must be going on in their world for that behaviour to be the right response? So this lady was like, who are these guys? Yes. They're going to take over, a significant share in the business. What's in it for me? Am I going to lose control, etc.? And we just built that rapport, listed those fears, addressed those, and brilliantly now she's on board. But we spent the time gently building that relationship.
Yeah, and I love the phrase, fear is false expectation appearing real. So the fear is real to the person experiencing the fear until that is taken away either by experience of something as an alternative outcome or releasing on the emotion that sits behind the fear. Now, my good pal Terry Gormley and business partner and long-time associate, Terry taught me a lot about the thought patterns and the emotions that result in our behaviour, if you like. So as a world-class behaviourist, that's his specialist field, and fear is a big part of that, really. And I know Paul spent a fair bit of time on this as well.
Can I just...
And in any transaction... Sorry, Paul, just quickly. On any transaction, particularly for the second-tier management or minority shareholders, the overriding thought pattern for them initially, for me, in my experience, is fear. It's like, what's going to happen? What's going to happen to me? What's going to happen to the business? And so I think you're right, Gavin. Addressing that and looking at that is a key fundamental in actually building the rapport that you're talking about. Go on, Paul.
I was just going to say, I think Gavin's drops is really cool, because I think if you understand someone else's buying energy.
Right. Hey, folks. So that was an interesting session. I've got another live session in 5 minutes. So at 12 o'clock, I will be